Welcome to this edition of ABI's Quick Bit video series. My name is Lisa Fox with ABI, and I'm here with Todd McDonald, and he's with ATW Training. And I think a lot of people have heard a lot about 260 E&F credits when it comes to training, and I think everybody knows just enough to be dangerous on that. And so I'm wondering if you could help us kind of explain.
And I don't know if I know enough to be dangerous. It depends on who you ask. But I have worked with, our organization has worked with a lot of companies that use 260E funds to fund the training that we do for them. In fact, one of my first jobs out of college years and years ago was funded by 260E funds.
So they've been around a while.
Yeah, absolutely. They've taken different faces and different things, but they have been around for quite a while. For those of you that don't know about 260E funds, 260E funds are really, there's really, I should back up here for a second. There's 260E and there's 260F.
Okay. 260E
funds are designed for those organizations who are expanding in the state of Iowa. It could be a new company coming into the state, or it could be a company, your company that is just growing positions. And basically what that allows for, it will provide a training fund for you to train those new positions.
Okay.
The way that it works is that you'll work with your local community college, and they've got a formula, and they'll figure out, based upon the number of positions that you're adding, based upon the number of employees and what the wages of those are going to be, how much you're eligible for.
Okay.
And then what they do is they purchase bonds for those. And so a lot of people think, well, how does this all work? Well, they purchase the bonds, and then what you do is you divert your withholding taxes that you would pay for those positions.
Okay.
So it's going to be it's a percentage between 1.5 and 3% that you will then pay back to the community college. And what they do is they use that money then to pay off those bonds. And so really it does become, it's money that you would have already spent on withholding taxes, but what you're doing is through this program is you're able to use that for the training of those new positions. The 260F funds are a little bit different, and that's for those organizations who may not be adding positions, but they've been in the state of Iowa and they want to maintain their competitive advantage. They want to continue to grow. The difference between the two programs, other than just the fact that it's not on new positions, is that the dollars are limited. So you will typically get between $25,000 and $50,000 is the numbers that are communicated. And so you'll get between, if you're eligible, and the community college can help you figure that out, you would get between $25,000 and then $50,000. The only catch, the catch back on 260E is that obviously you've got to add the positions, you've got to keep the positions, and those.
So be thoughtful when you go through
be very thoughtful, because
process.
You don't want to say, well, we're going to add 20 positions, get the dollars, spend the dollars, then all of a sudden say, well, those positions didn't work, we got to let 10 of them go, because if that happens, then you've got to pay those dollars back. With the 260F funds, you've got to commit 25% match. So let's say that you get. Get $50,000. Get $50,000. Then what you're going to have to do is you're going to have to match 25% of that yourself. So you would have to commit $12,500 with that as well. And what that's really doing is saying that you're vesting in that as well. Okay. You're not just using those free dollars with it, but you are going to put in. You made a commitment to it. And I think bottom line, when it really comes down to it, is what these funds allow us to do is really probably work on one of our most important issues around within the state, and that's employee retention.
Absolutely.
And that's developing of the employees. There's a lot of research that shows that the more that you put into the employees, the more I don't want to say obligation, but ownership that employee starts to give you, loyalty starts to have for the organization. Yeah, it's about having good wages and it's about having good working conditions, but if that employee sees that you're taking the steps needed to help them develop as an individual, they're going to be more loyal to you as an organization.
Fantastic. As always, great to have you here, Todd. Todd and ATW Training are a part of ABI's Advisory Council, a group of professional services organizations that gather monthly to identify issues facing Iowa companies and then coming up with great solutions to solve them. So thanks for being here. Appreciate it.